What's going on, guys? Welcome back to the Coinist podcast, the conversations that you can't miss as a crypto asset investor. Today's episode, today's show that you're about to listen to, or if you're watching here on YouTube, this is one of those episodes that lives up to that motto and gives you access and perspective that I really don't think you can get anywhere else. This was so much fun to record. It's the longest episode I've recorded, and I spoke with Sam, who's the CEO of Alameda Research. They are a crypto quant trading firm. I talk about what that means if your head's spinning and you're saying, what's a quant trading firm? We look at the difference of that and a market maker and a liquidity provider. All those words kind of get tossed around into one. We break that down pretty simply. We start off with Sam's Twitter account was recently hacked, and the hacker trying to convince me to send him some Bitcoin as we were setting up the podcast. Obviously, I wasn't talking to Sam. I was talking to the hacker. And then we look at Sam's background, how Alameda Research started. Recently, they live traded a massive, like $100 million trade, and it was posted on Twitter. So I wanted to understand what the strategy was there, why a firm like Alameda was making some of that stuff public. I think it's fascinating what they're doing in terms of giving people that kind of access. We also look at Alameda, and they hold 2 of the top 10 positions on the BitMEX notional leaderboard, which means that they've done around $60 to $70 million of profit on that exchange. So that's also another fascinating one, especially for the traders. We look at how you can remain market neutral and also be having those kind of results and what they're allowed to do there. And he also dives into some of the specifics with their strategy. That one is fascinating. And then at the end, we also look at FTX, which is an exchange they're launching, which allows traders to do new things that aren't available in the crypto market yet. Indices and indexes of the entire altcoin market is something that people talk about a lot, whether alts are going up or alts are going down. But right now, there's no way to really trade it, right? Indexes in crypto don't really exist yet. What's the correct benchmark? How do you create that? And the problems in creating those. FTX is creating some of those contracts. I think it's a fascinating discussion in terms of also they're creating leveraged ERC20s. There's so much stuff we talk about. I'm not going to be able to cover it all. Strap in. I hope you guys enjoy this one. It is a long one, but it's packed full of value, like I said, and I appreciate Sam for giving everyone and myself the access. Before we start the show, I do have one quick message from the lead sponsor who makes this show possible, and that's Bybit Exchange. I told you guys last week that they were letting me do a very cool promotion as a way to thank you, everyone who's listened. In July, we had 10,000 downloads for the first episode. I imagine this one's going to smash that. If everyone smashes subscribe, like, iTunes, do whatever you have to. Make this one huge. I know you guys won't disappoint. As a way to give back and thank the people that are listening, Bybit, the exchange who's sponsoring this, is every single week I'm giving away $100 in Bitcoin to someone who signs up on trading.bybit.com/venturecoinist. The link is also down below if you're watching this on YouTube. If you're on iTunes or Spotify, just go on over to YouTube and the link is right there. So whoever signs up and tries out the platform, I know you're going to like the platform that much that it's a way to incentivize you to actually get over there and sign up. And just by signing up, you get a free $10 and also a chance to win $100 every single week, which I'll be giving away live. This week's winner, the email starts with EME and ends with 82@gmail. And I'll be connecting with you later this week, giving you $100 straight to your account. So congratulations to that winner. I'll also have some way of posting it on Twitter or YouTube publicly so you guys can verify that it actually happens. But very cool way for the community to benefit, all the listeners to benefit from actually listening to these episodes, and also a really nice way for you to go and check out that platform. There's a chance to win $100 every single week. Not enough people took advantage of that. So click the link down below, sign up for a new account on Bybit. They're getting added to TradingView soon. They have Ethereum, Bitcoin, EOS, XRP, perpetual swaps. XRP is one of the only alts moving right now with Bitcoin this volatile. So if you like trading XRP to the upside or to the downside, you have to check out Bybit. They're one of the only platforms that has that XRP USD perpetual swap contract. I know you're going to love it, and I know you're going to love it so much that I convinced them to let me give away $100 every single week just for someone to try it out. Every single person that's moved over has not regretted it. So make a new account. The link is down below, trading.bybit.com/venturecoinist. And I think you guys are going to enjoy that. No overload, getting out of the trading view, and contracts that aren't available anywhere else. It's an exchange you have to be checking out right now. So check it out. Links down below. Thank you, Bybit, for sponsoring. Congratulations to that email that starts with EME. I will be depositing $100 to your account. And without further ado, guys, let's get into the episode. This one is huge. Like I said, gosh, this was so much fun to record. I hope you guys enjoy. If you do, tweet at me. I don't care if you leave a rating on iTunes or Spotify or whatever it is. Just let me know what you thought. I can't tell you guys enough how cool it is to get the feedback and get to hear that you actually are enjoying these shows. So appreciate it, guys. Let's get into it. Don't want to waste any more time. Enjoy the show. All right. Well, we should be live. Sam, thanks for joining me. Welcome to the Coinist Podcast. Thanks for coming on, man.
Thanks for having me.
Of course, of course. Before we get into everything I want to talk about with Alameda, with FTX, with so many topics, I think this honestly has like the potential to be the podcast of the year that I've recorded, just because not enough people are talking about your firm, the exchange, everything that's going on, but also because I was actually talking to you about setting up this podcast, and I was talking with Andrew, my friend who is helping set this up, and your Twitter was hacked. What happened there in the past 24 hours? How did you guys, what happened there?
Yeah, so basic answer is that there's someone who's been SIM swapping people in crypto.
Sure.
This happened with OriginX a few months ago. We don't use, partially for this reason, we don't use SMS two-factor authentication for anything, related to any of our businesses. I had a couple honeypots lying around. This was one of them. Another was a 2-year deprecated store of two-factor authentication codes that are no longer in use. And they've been targeting a lot of the larger firms in crypto. It turns out that it's basically trivial to SIM swap a US number.
Mm-hmm.
You just call up, the mobile carrier and say, hey, my name is, and then you don't give your name, you give someone else's name. You say you lost your phone, and then you get their number.
Yeah.
SIM swap one of our numbers. We recovered it a couple hours later, and the damage dealt was that they posted Bitcoin going to 20K on my Twitter account.
Yeah, it was. I was a little bit dumbfounded. I was like, well, we're set to have this conversation later. I was like, I talked to Andrew, everything's good, and we were also talking on Twitter, and then like an hour later, I tried to confirm the time with you, and he said, yeah, that's okay. By the way, can you send me some Bitcoin? And I was like, okay, something's not right here. I was like, things aren't adding up. So I was almost caught, but I was like, and then he told me he's getting me next. So if the SIM swapper is listening, yeah.
All right. Don't come stay on your toes.
Yeah.
And just don't use phone 2FA for pretty much anything. Twitter's a tricky one. They do it by default.
Yeah.
In that all you need to reset it is a text message. So.
Yeah. Well, I'm glad I'm talking to the real Sam today, and not whoever I was chatting with yesterday. But this should be really. Yeah. Go ahead. Yeah.
Oh, I just said one sort of humorous thing. Got a message from them in the end, saying, "Hey, if this hack had worked, we would have gotten a lot from you. So can you please give us a couple Bitcoins as a consolation prize?" We did not give them the consolation prize.
Yeah. It's hilarious. That's how the conversation ended with me. I said, I'm not actually going to send you Bitcoin. I think Sam's account is compromised. And he said, okay, well, you can send me Bitcoin or whatever, or else we're going to come after you. And I said, okay. And just like, let it go. So it was a funny conversation. Yep. I was like, well, this is weird. I don't think Sam was talking to me like this, but anyways, let's get to the good stuff. I'm glad to be talking to you and not the hacker that happens in crypto. I guess it's a good lesson for all the listeners out there. Where did Alameda come from? Because I saw them get retweeted. You guys got retweeted. I think it was a video actually of you, and you were trading some 7,000 Bitcoin sell that came through on Binance, and it was honestly the first time. On a lot of people's timelines, you see, a chart or some person trading or some person giving this, $100,000 price target. But it was kind of the first time where you saw a hedge fund or a quant firm or a market maker, whatever it was, giving a real behind the scenes access of what's happening. So where did Alameda come from? What were you doing before this? I guess I should start with at Jane Street, and we'll go from there.
Yeah. So I was, starting at college as a physics major at MIT, sort of realized halfway through college, I kind of didn't want to do physics and didn't really know what the fuck I wanted to do with my life. Had this sort of mid college crisis or whatever you want to call it. I'd had some friends who had interned at Jane Street and had liked it. And I was sort of separately thinking that I wanted to figure out how I could sort of have as much impact, as possible with my life, and that, finding a way to be able to donate a lot of money seemed like a pretty plausible path. So kind of put those together, interned at Jane Street, liked it, and then started full time after I graduated. So I was there for about 3 years trading ETFs, and just doing sort of quantitative trading in a group there. And then sometime in 2017, left Jane Street, and kind of took a look at crypto. It seemed pretty insane. Just from the perspective of like a ton of customer demand, a booming industry, and the infrastructure and the liquidity was just not very good, which kind of seemed like there's a pretty good opportunity to jump in there.
Sure. So I asked this almost exact same question to Arthur Hayes, CEO of BitMEX, for everyone listening, and I'm familiar. And I think he was working with, was it Deutsche Bank? I'm not sure the bank.
Deutsche, yeah.
Yeah, it was Deutsche or someone else. And the opportunity for him was he saw really quick, well, I can make money in this. Someone right now is kind of quoting futures, and I can almost make 10% per annum. The spread's kind of ridiculous. Was it more of you saw it was inefficient, or when you looked at it, you said, okay, this is like a totally new asset class that I think has massive potential based on what's actually going on here? Or was it kind of just like the quant mind of this is a new asset, I can kind of gobble those inefficiencies and make money?
I think kind of the very first thing that struck me was just how inefficient it was.
Sure.
And I guess I wasn't sure if that was true. More it was I looked at some data and the data looked really inefficient, but I kind of thought maybe it was fake. It's sort of implausibly inefficient.
Yeah.
And then sort of stuff too was like, okay, like if this is real, there are some pretty big opportunities here for liquidity fighting, arbitrage, things like that. And so I sort of started digging deeper. And really the only way to dig deeper is to try it out. Like you're never really going to know if you can do a trade until you try doing it. So I started kind of playing around with it late 2017, and decided a lot of the data was kind of fake, but some of it was real, and enough of it was real that there really were some pretty exceptional opportunities. So late 2017, I was sort of scrambling to get crypto accounts together. I'd noticed some large arbitrage between BitREX and Poloniex, but I'd have, $2,000 of withdrawal limits a day on Poloniex. So I'd be like, oh, great, just made $30. What next?
Yeah.
And just ran into a large number of those problems where, I'm like, holy shit, this is like an opportunity to make $1 million, and instead you make 1,000. You're like, why is that? Well, I didn't have a KYC didn't count on this exchange, or like my withdrawal limits were too slow, or like my bank account refused to wire to this exchange, or and sort of the deeper you dive into crypto, the more you realize there's just a ton of this shit. Where like coming from normal finance, I'm used to like, no, you buy Apple on NYSE, you sell on Nasdaq, and you made money, and it is exactly what it looks like. And then you go to crypto, and you're like, oh wow, it's like an entire new business area to get a good account on this exchange.
Yep. Were you already on your way out of Jane Street, or what prompted the switch?
Yeah, so I was already out of Jane Street when I started this, and I think there are a lot of things coming together. I think that like one of them was there were a lot of things I wanted to try with my life, and I sort of felt like it was now or never. I really liked my time there. They're really good to me. I have sort of no gripes about them at all, and I'm really grateful for my time there. I think that like I'd always kind of wanted to try starting something, and I had a lot of ideas of things I wanted to do with my life. Everything from like working at a charity to trying politics to a bunch of other things, and it seemed like maybe one of those was going to end up pretty exciting, and I was never going to know unless I tried.
Exactly. That's probably a similar story for a lot of people. It's like they found their way here by chance, and then it's also kind of
Yeah.
it just gripped them. There's two kind of, I guess, big sections I want to dive into with our conversation. The first one's Alameda Research and Alameda as a firm, and then also FTX, the new exchange. I'm going to start with Alameda because I think that's probably a good base. I think that's where you also started. That FTX
Yep.
comes after. So what's the best way to describe Alameda Research or Alameda? I'm not sure if you call it a fund. What
Yeah.
is Alameda for everyone that's unfamiliar with you and with the firm as well? Because I think a lot of people are going to listen to this and say, what, like, how did I not know about this? And I started connecting the
Right.
dots when I saw CZ tweet this last week, and I had another friend who told me he was helping you guys out and a lot of things, and I was like, whoa, 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 there's a way bigger story here. So what's Alameda in one or two sentences, and the best way you could describe it?
Yeah. So we're, quantitative cryptocurrency trading firm. Um, and we do, a combination of arbitrage, quantitative strategies, liquidity fighting, OTC trading across a bunch of different platforms. We're trading about 30, 35 platforms, trading hundreds of coins, although most of our volume is sort of, the top assets on the top platforms. We're trading about $1 billion a day worldwide. And doing sort of a pretty broad swath of crypto trading. We're about 20 something people, um, and we've been operating for about 2 years. One thing that I'll note, and this is like, if this were sort of on Wall Street, I would say we're a quant trading firm, and that would be that, and people would sort of have a pretty good guess at what that meant.
Sure.
Maybe I'd specify a little more. It's quite a bit trickier in crypto because you sort of see these words like quant or market maker or things like this seep into the crypto landscape, but take on their own life. And so, as kind of an example of this, we no longer call ourselves a market maker. We never use that to describe ourselves. And the reason, even though it's a pretty good way to describe some of what we do, is, well, it's sort of been co-opted by wash trading on fake exchanges. That's,
Exactly. Yep.
if you want to say we're a fake exchange and we want you to self-trade, you ask for market maker. So now we can't call ourselves a market maker. We're a liquidity provider instead, which on Wall Street, those are just synonyms. But in crypto, like, so, when I say we're a quantitative trading firm, that actually means a lot of different things. And, it could mean anything from like arbitrage to CTA to, we go short coins we think are going to go down because we don't like their technology.
Sure.
And, I think what it means sort of in our case is like, a lot of arbitrage based trading and then a lot of sort of statistical model based trading.
Okay, so yeah, I'm so glad you brought that up and that you have to actually choose between using those words.
Yeah.
The funnier part is, I'm you just look across Twitter, and I bring up Twitter so much because it's kind of like the hub of where everyone talks, retail or even institutional. I think crypto is a little bit unique in that space, in that sense, in the fact that hedge funds and exchanges and every
Yep.
individual is kind of meeting on Twitter. And a lot of people will say, the market makers are hunting my stops, or they're talking about some random altcoin on some, exchange that I've
Right.
never even heard of. And it's like, well, is that really a market maker? Or is that just some guy that owns like 25% of the supply and he mined in 2014? So it's funny.
Exactly.
All the words kind of do take a different meaning in crypto. I was gonna dive in there and say, you look at Alameda and you say, is this an OTC desk? Is this just, are they just doing arbitrage for their clients? And I guess the other way that I want to break this down is there's maybe some other firms that people might recognize, whether it's Tagomi,
Right.
whether it's OmniX, whether it's FalconX. What's the biggest contrast with Alameda? What's kind of the difference there? Or are you just literally in that same group and you kind of provide a different niche? What's the
Right.
contrast
So
there?
we're in a very different group from them.
Okay.
And as you say, it's really hard to like,
We
it's
needed we needed
particularly
we
in
need new
crypto.
words. Like
Exactly.
yeah.
Everyone's just using the same words to describe very different businesses.
Yeah.
And so, so I think that like maybe to point at some of the differences there. One is that our sort of core quant trading operation doesn't have customers. We don't have investors. We're not a fund. We don't have customers. We're a proprietary trading firm. And what that means is that rather than, if you look at some of these kind of platforms is maybe what I'd call like the OmniX types, the
Yeah.
Falcon X's, like those are primarily like, it's not doing kind of internal quantitative trading. And obviously it's going to vary a little bit from one to one, but sort of the general business model there is more they're an aggregator of liquidity across a lot of venues and market makers, or sorry, liquidity providers.
Yeah.
And what they do is they kind of combine all those together in a clean, simple UI for customers, and act as an agent of the customers
Customers
executing trade.
primarily being funds.
Yeah, although in crypto, again, in normal finance, it's like, what's a customer? It's either a ton of retail or it's like a pension fund. In crypto, what's a customer? I mean, it might be like a guy who bought like 10,000 Bitcoins when they're $2 each.
Yep.
And now he's a whale. And you're like, is that a customer? Is that like a fund? Is it like, I don't know. It's kind of both.
I see what you mean. Yeah. It's less of an outlier
So
here. Yeah. Yeah.
exactly. And you know, it's a lot of it's like some family office decided to buy a lot of Bitcoins, and sometimes they buy and sell them. Like that's a customer in crypto.
Okay.
And so, so you know, that's sort of you know what that like archetype is. And what we're doing rather is more sort of you know, trading on exchange mostly. We don't trade for customers. We're just trading our own money. And we're sort of, you know, looking for quantitative trading opportunities, whether that's an arbitrage between two exchanges, whether that's some sort of, you know, model that we've built that we think predicts short-term price action in some assets, whether that's understanding the relationship between derivatives and their underlyings, whether that's understanding exactly what a tether is worth, and putting all those together to basically say, hey, like here's a case where we think we can, you know, sell an ETH for a tether, and we think it'll be good by, you know, 0.1% to what we think ETH tether is actually worth, and sort of, you know, building that out to a bunch of different assets and crypto platforms, types of trades, and it's all just done on our internal book. And you know, the form that it takes is often sort of a liquidity providing form, in that, you know, a lot of what we're doing, the sort of line between arbitrage and liquidity providing is quite blurred.
Sure.
Because if you're providing liquidity correctly, then whenever you get a fill, you can kind of arbitrage out of it.
Yep.
But
Yep.
exactly. So, so you know, all these things get a little bit mixed together when you drill into it. But you know, that's sort of the way to think of this. Maybe a way to think of this is sort of like an HFT firm. How people would think about HFT firms, except instead of being sort of high frequency, you know, just trying to take against people who are slower, it's more like trying to have like moderately more sophisticated models for a lot of the assets. So we, you know, operate on a moderately lower frequency, and we do more sort of providing and more, you know, trying to, you know, do quant trades on a bunch of different types of assets than like sort of the bread and butter HFT trade of like, you know, 5 milliseconds. I think I'm gonna make money on this. But in terms of, you know, being a proprietary trading firm, just trying to do trades we think are good on our own book, we're sort of more in that mold.
It's almost like the infrastructure here forces what would be HFT trading, like you said, to almost be like a slow motion of it's still way faster than what anyone else is doing, but it's
Right.
like it's as fast as you can go, making it slightly more efficient. Like
Exactly.
Just, yeah.
Right. And it's a good point, right? Like when half the matching engines in crypto lag by half a second, like what's it mean to be a millisecond timescale crypto trading firm exactly? Um, and and you know, when it takes an hour to move an asset from one platform to another and you can't share your collateral between them, like sometimes you're like, oh shit, I want to do this trade. I'll be able to do it in an hour or so, maybe 3 hours if it's BSV you need to move around. And you know, it doesn't matter how fast your systems are, you're not going to speed up the BSV blockchain. Like, so yeah, so exactly. Like, the infrastructure here is so underdeveloped and rickety that like a lot of what we do, you know, we whatever, we build models, some of them are kind of cool. But like, you know, you drill into it on a specific time on a specific day. You know, we got some people who are like doing some cool studies, testing some intuitions. We also have a lot of our traders who are like, fuck, we need to withdraw like 500 BCH from this exchange right now. And our daily withdrawal limit is 200. And they also haven't processed for 12 hours. And we're waiting for a phone call. And what do we do now? And so think, well, we can like, here's some ways to route around this. Like, here's the people, here's the WeChat accounts we need to contact to try and solve our support problem. Like, we spend a lot of time on WeChat, right? Because like, I don't know, you got your coins stuck on some exchange. They're going to let them out eventually, but like, you want them right now.
No.
And they're kind of like, yeah, we'll get, you know, a security process, something, 24 hours. And you're like, no, how about right now?
Yeah.
No, right? What you do, you like call someone up on WeChat.
Yeah.
So, you know, we do a whole lot of operational work. Another side of this is like banking. You know, for anyone who's tried to bank and also trade crypto, it's a nightmare. I mean, you go, you know, we had a Bank of America account at one point, and you know, we kind of go in there each day, and the bank tellers get super excited because this is by far the most exciting part of their day. When like we'd all walk in and be like, yo, okay, so we got like 10 million bucks of wire transfers, and we got to get them out 20 minutes after you receive them. You're going to get them in about 30 minutes. And it's going to require approval of your manager's manager's manager. And it's going to be going to these 5 places. And we got to get all this, whatever. We'd have this whole thing that we need. I never got really into it. Then at the end of the month, there's the sort of compliance review, and sort of master compliance is like, so tell us about this Alameda Research. They seem to be a large fraction of your bank's wire transfers. And the teller's like, oh yeah, we love those guys. It's like, it's a bunch of 20-year-olds. They got this cryptocurrency trading startup sending, 10 million bucks a day to, these like businesses all across the world that are trading coins, and like in like all these currencies, and compliance is like, what, that's like literally the worst client you could have.
Exactly.
Like, what are you thinking? Like, imagine the AML, the anti-money laundering and know your customer risk that we as a bank are taking on. Like, can you ask them to track every Bitcoin? Like, obviously not. Like,
No, yeah.
And so, as anyone who decided to do this, it's actually a hard problem. And so we spent a lot of time, talking to reps from banks about like finding a solution that'll work for us. We spent a lot of time like whitelisting addresses on cryptocurrency exchanges, talking to account reps. We spent a lot of time dealing with AWS because that's where crypto is. And so, there's a whole lot of operational things that sort of go into this as well.
Of course. You brought up that good example of when you started, or I guess when you recognized it for yourself and you were like, okay, there's a massive opportunity here. Here's the value it could actually capture. And I think I have a similar experience. I don't know if it was PIVX or some privacy coin got moved from BitMEX to Binance. And I think this is maybe the only asset class where like a retail individual can recognize there's going to be an arbitrage, try to take advantage of it. And then it still takes so long because the blockchain can't handle the withdrawal and the deposit. And I'm like,
Yeah.
look, I was just making him like maybe making to look, $5,000, $10,000, and it still can't even, like, the trade was right. It's just the infrastructure isn't ready.
Exactly.
So yeah.
And I think one of the key pieces there that makes these sort of opportunities seem to exist but be hard to take advantage of is in finance. It's not that you can move Apple instantly from one exchange to another. It's that you don't have to, because you just have centralized clearing firms that are like, look, we see your entire book. We know you're hedged. We saw you buy Apple there and sell Apple there. Like, we're not going to make you move your Apple from one place to another. We'll deal with that. And in fact, they'll give you margin and things like that. And so, rather than have to wait for a blockchain, the equivalent would be you just short sell PIVX on Binance. You buy it on BitREX, and then you're done. Those net out.
Yeah.
But in crypto, no. Like a Binance PIVX is just a different coin from BitREX PIVX. And if you want to turn one to the other, it's going to take you some hours. Yeah. And there's no lines of credit. There's no margin trading on most of these platforms. If there is, most of it's bad. And that just means that like it's not easy to close these down. And sort of another example of this is, we have a hedged book, and maybe you'd say, oh great, your book's hedged. Like, I guess you don't need much capital then. No, we need a lot of capital. Why is that? Well, I don't know. We got this large position on one exchange, this offsetting position on the other, and they don't talk to each other. So each exchange is like, this is a big risky position. We're like, no, it's not. We're hedged. But
exactly.
So we have to separately collateralize every single position we have, including offsetting ones. If we want to be able to sell on Binance, we got to have a Bitcoin there. If we want to be able to sell on BitREX, we got to have a Bitcoin there. We can just keep our Bitcoins in one place. So, the result of this is that the whole place it's super messy and fractured. The liquidity is all over the place. You can't net things out against each other easily. And it means that these arbitrage opportunities, they pop up and they're actually operationally difficult to take advantage of.
Yep. It's the trustless nature of it in a lot of ways cures some inefficiencies, but in terms of trading and in terms of speed and in terms of efficiency, it actually kind of makes things slower. One of the things that you guys put out that caught my eye was you trading exactly one of these opportunities. It was I think it was a 7,000 Bitcoin seller on Binance. Yeah. It was a week or two ago, and it pushed them. I think the Bitcoin price was, per the video, and I was also watching it live, sitting here at my screens, like 2% below the rest of the exchanges, which isn't a lot, right? Some people are listening and saying, oh, 2% is whatever. But 2% on an exchange like Binance versus BitMEX and Bitfinex, and sometimes there's a slightly different price based on tether or whatever it is. But that was a pretty big discrepancy. And in the video, you're talking about, look, how much money do we have on Binance? If we're already long or short somewhere else, can we just kind of capture? Can we stay neutral? Right. Can we get enough money to Binance? Can you kind of walk us through or walk me through and everyone else what was going on there?
Yeah, absolutely. And just to address your point, is 2% a little or a lot? It depends on how big you're doing it. And the cool thing about this was it was $100 million. So if you could actually make 2% on $100 million, that's a lot of money. And then the question is, well, how much can you do? So what happened was someone sold, 100 million bucks of Bitcoins on Binance. And the way they did it was they just did it. They're like, here's our Bitcoins, we're selling them now. So they placed a giant offer, they sold some, they stepped the offer down, they sold some more, they stepped the offer down, they sold some more. And Bitcoin's crashing because of this guy, but it's crashing more on Binance than anywhere else because there's a giant seller there. And what we want to do is just lift his entire offer and hedge by selling in some other places and have made a lot of money. But we can't do that because we don't have 100 million Tether sitting on Binance. And again, because you can't net out across exchanges, because you can't do large margin trades, et cetera, you can't just, even if you think you're hedged, you can't just lift this. So, what were we thinking there? Well, one thing is like, we want to figure out when we want to buy this. Eventually we decided it was time to buy. Is that sort of a low enough price that we thought we were just going to be able to hedge it, make money on the arbitrage? But in order to do that, we needed Tether there, and we spent all of our Tether lifting the first piece of this.
Yep.
And so we're kind of frantically, collecting all the Tether that we could, getting it over there, thinking about things like, okay, like we want to be sending, it's now ERC20 Tether, which is faster, but like it's not whitelisted from this place to Binance. We can't send directly from OKX to Binance. We got to route through this third place. That's going to add on another 20 minutes and, margin account here and like, all these different things. And so, one part of this was us kind of scrambling to just like get all of our assets in the right place. And then on the back end, of course, we need to hedge this. There's a lot of Bitcoins which we were trying to buy, and we had to be very like, all right, if we start buying these, we got to find a place to sell. Where are we selling? What's the best place to sell? Where are we going to be able to get enough size off? Where's the best price? Do we have enough capital there to be able to do it? Like, do we need to be, shuffling capital around on that end? And then, the third thing that we're thinking about is what's a Bitcoin worth now? Usually it's easy. Just look at Coinbase, and that's pretty close. Maybe it's off by 3 bips or something. Right now, Binance is 2% below everything else. So I don't know what Bitcoin's worth, Is it worth a Binance Bitcoin? Is it worth a Tether Bitcoin, a Coinbase Bitcoin, a future Bitcoin?
Exactly.
Like, those are all really dislocated. And so, separately, someone comes to us OTC and they're like, hey, we'd like to buy a Bitcoin from you. What price do we sell it to them at? I don't know. It's pretty ambiguous. And of course, we're in competition with other people for that trade. So we're trying to guess, like, what's the world think a Bitcoin is right now? What do we think it is? Where are we quoting this? And that obviously depends not just on the current prices, but on what the fuck's up with this guy. Does he have another $1 billion behind him he's about to sell?
Is he smashing ask again, or is he going to keep? Yeah, exactly. Where's that coming from?
Exactly.
What's his incentive?
Exactly. And so sort of all these things were flying around at once. And sort of the cool thing that happens is this in real time. And I think this actually be a pretty boring problem if you could write a year-long research paper on it. You'd spend about 3 days thinking about it, and then you just do like a lot of grunt work, like figuring out exactly how to optimize the Tether, and be like, all right, here's my report, and you'd read and be super boring. But you don't have a year, you have a minute. Like, every minute you waste, someone else is trying to do this, and they're going to beat you to it. And so it really is just like, all right, we're not going to do this perfectly. Like, what's the right first step here? Or what's a reasonable first step? Or what's the best first step we can think of in 5 seconds of yelling at each other?
Yeah. I didn't hear too much yelling. You guys were actually pretty calm in the whole situation.
Quiet. Yeah. We yell when there's a lot of noise in the background. But when no one else, this is like late at night, there aren't that many other people in the office, things were pretty quiet. And so we're just sort of talking relatively calmly to each other.
That must have been it. I was like, oh, they actually stayed relatively calm. I feel like that's a rather big trade, and everyone seems pretty under control. I think it was handled efficiently.
Yeah.
Before we go into my biggest question is, why share this publicly? And I think this is kind of a really cool thing you're doing with Alameda and also with FTX. But also, before we get into that, with still the Binance situation, I'm sure this is going to relate to other situations going forward. How much of what you guys do is human or is kind of subjective versus how much of it is just systematic where your algos are picking it up or you're toggling some settings? I know you talked about in your video, and I can only imagine someone trading $1 billion in volume every single day is sometimes tweaking volumes in terms of or selling more Tether or understanding different things like that. Like, how much of it is you guys seeing an opportunity, like someone actually putting that much in the book on Binance, versus your systems trip you up and you say, okay, it'll kind of handle it on its own? What's the trade-off there?
Yeah. So it's sort of on the border. And the way I described it is almost all of the volume is done by automated systems, but with really heavy manual input. And I think the way I often think about our bots is as really dumb humans with 10,000 hands. Um, like they're just doing what we told them to do, and they're not very smart. They just do exactly what we tell them to. They don't innovate, but they're fast and they can do a lot of things at
Sure.
once. And so, as much as possible, you try and offload everything to them. But if the world changes, they're not going to know that, right? Like, sure, we have these algorithms or whatever. Our algorithms were not trained on a 7,000 Bitcoin seller on Binance, right? You can imagine running some historical algorithm of Bitcoin price, and like about 0% of your model is going to be what happens when someone sells 7,000 Bitcoins on Binance. So we just like don't actually think our models are like particularly tuned to that. They'll try and do something reasonable. Like they like doing arbitrage, they like being hedged. They're going to try and trade those off again, whatever. Like they're going to try and do reasonable things, but they're not going to like really be maximizing that. And so whenever anything kind of weird or big or unusual happens, humans will sort of jump in and it's almost like I sometimes think of it as like be the DJ. Like you got this, like if you don't do anything as a DJ, the music it still plays, it's still there,
And people are happy.
but like
The fun might be happy.
people are
Yeah.
happy, exactly. But like then you're like, oh god, like everyone really wants an up tempo song, and like this is not that, and you gotta start like and so that's often how I think about it in my head, and we'll jump in and we'll do everything from to like, hey, I really think we just need to be optimizing for Tether on Binance right now. Like our bots are like, yeah, I think we should move a little Tether over. And we're like, no, you should move a lot of Tether over.
Okay.
And a lot of places, it has a lot of safety checks. It has a lot of like, not wanting to do big things for no reason. And we sort of want human sanity checking that. And one of the big reasons is the bot says, hey, there's a $100 million 2% arbitrage. Is there? Like, I don't know. If your computer's telling that to you, maybe there's just bad data,
I see
right?
what you mean.
Like,
Yep.
just conditional on your computer thinking that, I think there's a pretty decent chance that like Binance accidentally started publishing order books from yesterday or something. And if that's the case, then you don't really want to like close down all your positions to send like all of your money in Tether to Binance.
Sure.
And so, things like bad data actually play a pretty big role in crypto too, which is another reason that like we really want humans sort of sanity checking anything big. And so, we'll be everything from reshuffling capital to being like, hey, I think we want to like buy some Bitcoins right now, to sort of being like, hey, I think we want to like really look for a lot of edge in trading this thing. Like this is super toxic flow. We don't know what the fuck is going on. Like we're gonna lose money if we're just prying too tight here, to being like, hey, we really want to do all of this trade. This is a great trade. And to like, hey, like this is where information is right now. Like our models don't understand that. And so there's, we have a spreadsheet with like tens of thousands of parameters, and then we have sort of internal systems that have a smaller number of parameters that we can kind of tweak in real time to kind of get the bots to do what we think they should be doing.
You're the DJ. Your systems are kind of the music that's going out, and you're just making sure that they're playing the right song for the environment, I guess, for the market texture.
Exactly. And when things are quiet, you kind of look at the DJ there and you see him going like occasionally,
Yeah.
and you kind of think he's not doing anything. Like he's just doing that because he's.
But he is. He's
like,
monitoring.
Right. He's monitoring, and like maybe it wasn't really important that he like wiggled his hand a little bit there, but like he's there because sometimes you really need him there, and
Okay.
that's how sort of we think about it too. When things are quiet, our traders are mostly working on longer term modeling, and then when things go crazy, they'll just jump on and think about like in the next 10 seconds, what do we need to be doing?
I like that. I like that analogy. I didn't think we were going to be talking about DJs today, but it's a really good analogy. Past that, past kind of the technical background of what's going on there with the trade, why you're doing it, who's actually making the play, whether it's a human or whether it's an algorithm. Why are you sharing this publicly? I think that was the question that came to me. It was like, first of all, I'm interested.
Yeah.
And second of all, I know someone told me to check this out. And third of all, there's something here, but why are they making this public? There's a lot of, especially in finance,
Right.
I think I had Willie Woo on here last time, and I plan to have on, I won't name their names. In the next 2 weeks, I'm going to keep it a secret, but a lot of people kind of keep their cards close to their chest. Maybe more so in crypto. They open it up and share research, and there's this ethos of, and it also makes sense, right? Share your research, you can gain reputation, you can get a lot of leverage that way. But I haven't really seen a quant firm or a fund really going behind the scenes of you walking through a trade live and things like that. So why do that?
Yeah. Why do we do that? So I think you can maybe give two answers. The first is, why do I think we didn't lose much by doing that? And the second is, what was the actual impetus for doing that? So the first thing that I say is, why does no one do it in finance? Well, one of the biggest reasons is people are terrified about leaking IP. People are terrified about everyone else figuring out how they trade. This particular case, like, I don't know, if everyone in the world knows that we like buying Bitcoins 2% below the market, I think I'm okay with that. I don't think we're kind of giving away industry secrets there. And I think this is sort of an interesting case of a trade where, it wasn't some like really cool secretive model we had that's really insightful and you'd never come up with, but generates a ton of money. It's like, okay, here's a big dumb arbitrage. Let's try and do it. So, this particular case, whatever, this wasn't really particularly IP sensitive. And I think that's also sort of an interesting thing in crypto is you get a lot of these where like there's a really good trade and actually can talk about it and people still can't do it because the limitation is not realizing it's there. It's having the infrastructure to be able to do it, having the the limits and the capital and like the systems and the accounts and the banks and putting all of those things together. So that's sort of one piece of the answer. Maybe another piece, which I'm going to slip in sort of a third thing as well,
That's fine.
is that we are quite a bit, I don't know what the right way of phrase this is exactly, but quite a bit leaner organizationally than a lot of quant firms are. And we're 20 people or so, which is, it's not nothing, but it's not a 500-person firm. We're not very bureaucratic. Yeah, I think at most firms, an idea like live streaming this would just get shot down out of hand on the grounds that that seems like probably bad and we just don't want to deal with that. And
Sam, I want to pause you. Leaner in
yeah,
terms of team size, but in terms of volume, I mean, you
we're
guys are
pretty
definitely
big.
you're in the heavy hitter.
Yeah,
Okay, so
yeah,
keep going, and then we'll hit that later.
yeah. So, another thing is just like we actually have the ability to greenlight things like this. Whereas at a lot of firms, it's just like, yeah, okay, we got to have a meeting with a lot of people, consult these. Like,
Sure.
we had 5 seconds to make this call. Like, it is now or never. And then the last thing is why do it? I mean, I think one side is like, I think it's a pretty cool opportunity. And I think like people have basically no idea what's going on behind the scenes at quant firms.
Mm-hmm.
And I think that this is sort of an interesting window into it to showing like both some of like what makes us a quant firm and also what is sort of uniquely crypto about this and how much of a role the infrastructure plays. I think this is a thing that I kind of harp on a lot when I talk. Like the infrastructure in crypto really matters, like way more than you see in finance, in traditional finance. Like it's really rickety. It's really difficult to use when you really need it. And you just see all these pain points from the fact that there's no clearing firm, there's no shared collateral. There's, margin trading is completely fucked on most platforms or
Mm-hmm.
non-existent. And I think this is like a really good case of like, yeah, there's just $2 million to make if the infrastructure was perfect, but it just wasn't. And the entire trade was trying to navigate that. And so I think it just like really underscores a thing which is, I can say it as much as I want, but I don't think anyone's really, I think it's really hard for it to register how central that is to a lot of areas of crypto unless you just see it in action. You're like, okay, yeah, I now see that. Like that whole fucking trade was figuring out how to deal with the fact that like, you know, all that Binance knows about is the tether sitting on Binance.
There's not really. I guess everything is so standardized in traditional finance as opposed to here. It's still fragmented. I mean, exchanges
Yeah.
are what was the thing I was trying to. I was just connecting like a public tool, like a free resource for everyone. I used to publish like a free, it would kind of track Bitcoin trends and use moving averages and things like that. And I was talking to developers I used to work with at a previous broker, and they said, what exchange, like what do these exchanges use in terms of API? Is it fixed? Is it? And I was like, well, I don't know. I was like, I
Oh
think they just
boy.
change it all the time. I'm not really sure. And
Right.
he's like, yeah, I think they do too. I'm looking at the documentation. And it's like, okay, that's a little bit worrisome. So
Yeah.
I think a
Yeah.
lot of people probably see the problem, and then it's very few people like yourselves or other funds set up in a similar situation can actually take advantage of it.
I think that's right. And like we've spent thousands of man hours, like probably 10,000 man hours or so, dealing with exchange APIs. Like, how'd you trade on 30 platforms with a good like institutional size setup? You spend a whole lot of time
Yeah.
digging through these docs because every exchange is different. And most exchanges are just not complete. They're like, yeah, our API doesn't give you your fills. And we're like, all right, well, how do we know what trades we did? They're like, I don't
We'll
know.
fix it
Our
next
API
week.
doesn't give you a field.
Yeah.
Exactly. And then next week it's definitely not fixed.
Yeah.
And so, some APIs, they're like, yeah, we only tell you your balance by market, not your overall balances. You're like, fine, I'll just scrape all the markets. Like, all right, but you can only call the API once a second. And you're like, all right, so you're telling me that this second I get to choose whether to know how many Bitcoins I have or how many Tether I have, but not both. And you just run into so many problems like this, and you're like, all right, well, this exchange, it's an app. It actually doesn't even have a browser, let alone an API.
Mhm.
And um, and it's sort of a cool technical problem of like, how do you trade on a lot of venues when these APIs are all over the place?
What's going on, guys? Hopefully you're enjoying the conversation so far. We are right about to get into what Alameda is specifically doing on these platforms, whether it's Binance, whether it's BitMEX, how they're actually managing their strategies, how they were able to get to 5,000 or 6,000 Bitcoin profit on an exchange like BitMEX, what type of strategies they're employing, and the amount of access that this conversation gives and that Sam was able to open up to, I think is really, really cool. Before we do that, though, I do have one quick message from my sponsor, GlassKnow.com, who's helping make this Coiners podcast possible every single week. When I did this last week, I had so many people tweet to me and say, I cannot believe there is a website like this for free. GlassKnow.com. Go to it, click on Studio, and they have charts and statistics and information that I honestly still am trying to wrap my head around how it is free. If you want to understand how much Bitcoin, Ethereum, or cash is flowing into certain exchanges, whether it's Binance, whether it's BitMEX, whether it's Bittrex, all these different exchanges, you can visualize on the blockchain. They break all that down for you. You can look at how much Ethereum went into Binance yesterday or how much came out. You can also look at how many new addresses were created on the Bitcoin blockchain, how many new people are coming into the Bitcoin blockchain, different things like that, how many transactions are happening. So all the cool charts that you want to share on Twitter, or that if you're just trying to pad your own research and understand the new fundamentals for this new asset class, I cannot recommend GlassKnow.com enough. When I started working with them, my goal is to really only work with companies that I think provide value to other traders and investors, and Glassnode fits that mold perfectly. Please check them out, GlassKnow.com. Click on the studio. It's free. There's no download at all. And whether or not you want to impress your friends by sharing a chart on Twitter, or just continue to learn about what's happening in this asset class and gain an edge by understanding what's actually happening behind the scenes, not just the price, but understand what's happening on the blockchain, how many transactions are taking place, how many new wallets were created, things like that. Glassnode.com is the place to go. Thank you guys at Glassnode. I can't even wait to hear how many people have checked this out and didn't know it existed. So let me know what you guys think. Enjoy Glassnode.com, and let's get back into the conversation. The rest of this is a good one, and hope you guys enjoy. Yep. One of those venues you guys do trade on, BitMEX, probably the most, well, it is the most liquid perpetual swap and Bitcoin exchange as well. I had Arthur on earlier and
Yep.
talking about the most successful product pretty much in Bitcoin's history, right? He launched the Bitcoin perpetual swap. I'm not
Oh
sure
yeah.
what they do in terms of volume every single day, but the other thing that caught my eye and why I put so many of these puzzle pieces together and was so interested in having this conversation was Alameda is in the top, I think they hold 2 positions in the top 10 in terms of the BitMEX leaderboard, which a lot of people pay attention
Yep.
to. Those positions are like 5,200 and 1,600 Bitcoin notional profit, which I don't know the
Yeah.
exact numbers. It's somewhere between like 50 and $70 million. Are you guys, is BitMEX primarily where you were trading before? Is it a lot of Binance, or kind of what's the story there? And then the other side of it, it's really
Right.
this. It's really the same question as your Binance trade of why have that there? Is it
Right.
what's kind of the incentive there?
What's it doing
Yeah,
there?
yeah.
Yeah. So to answer the first question, and we trade a bunch there, but it's not the only platform we use. It's not a dominant one. It's one of the top ones. I think it's one of the top 3 or so by volume for us, but it's not an outlier. We're again trading on 30 or so. I think the bulk of our volume is on 7 platforms or so,
Okay.
of which BitMEX is one of them, but not a dominant one.
Okay.
And so we obviously do use it a bunch. We also have some other accounts there. Maybe even some other in the top 10, I think, which are not actually revealed. But
If they are, they're still using default names. That the biggest question was like I saw one Alameda
right,
and then I saw
yeah,
Alameda at Gmail,
that's
so I
right.
was like,
Yeah,
those have to
we
be
have
you.
two
Okay,
that
public.
we've turned to real names.
Okay,
Yeah, two public ones. So to get to sort of your other question of why do that. Um, so basic answer is uh, that we especially until recently have had basically no public profile. I think until January or so of this year, we were basically hiding under a rock. This sort of was mimicking the traditional Wall Street approach for quant firms of like, why would we want anyone to know we existed?
sure.
That just seems bad. Like it invites competition, and I don't see what we get from that. Um, and so we sort of took that approach. Only the exchanges knew we existed, no one else.
Yep.
And then things changed. The first thing that changed was we launched an OTC business. So we now have an OTC desk. We have an automated OTC system. So we have an RFQ platform where you can kind of query for quotes 24/7 and instantly trade in 20 or so coins. And we also do text trades as well. And we were sort of building that business out, and we thought we had a pretty cool product there, but we didn't know anyone. Like we didn't know any customers, and we sort of were trying to think basically what's the best way to kickstart our PR here. Like, if we sort of want people to know that we're a place they should look at when they're looking for liquidity, like how do we do that? And there's a lot of things you can do, but the problem is almost all of them have very little signal. You can advertise, right? You can go to conferences. There's like all these things you can do, but anyone can do them.
Yep.
Like it's very, very hard to distinguish whether someone's legit from that or just decide to spend some money.
Especially here. Yeah.
And especially here. And it's just like, what can you like? It's actually very, very hard to think of any PR strategies that have signal in them, where you're like, yeah, okay, that advertisement I just saw really should convince me of something. And we sort of thought of this and we're like, okay, this has signal. Like obviously it doesn't tell you everything you need to know about us. Like I don't think you should see our position on the leaderboard and be like, yeah, that's the best OTC desk. Like, no, you should separately evaluate our OTC desk.
Okay,
but it was enough for people to know they should take us seriously, and that it was like sort of the biggest thing is like worth their time to bother onboarding with us, to bother filling out our AML KYC forms, to bother figuring out how to use our product. And we sort of felt like once we get to that state, then people can just judge it on its merits. And if they think it's the best OTC desk, great. And if not, fine, use someone else. But we want people to get to that point. And this just seemed like by far the easiest way of getting there. And I think it was probably relatively successful at that.
I would say so as well. I think it's also, like you said, it's an objective measure as opposed to someone looking at the two and saying, "Oh, that's good advertising," or "I've heard a good thing about them." You can say,
Right.
"Okay, this is like most of finance, and why I think most of us are attracted to it." There's at the end of the day, there's a very objective scoreboard of how well you did.
Yep.
In terms of that, and if this question crosses any boundaries, feel free to not answer it. But with your BitMEX approach and just reading it on Alameda's website and also understanding from everything you guys are doing, your mandate is to stay market neutral. Is that primarily what you're doing still even with the BitMEX strategies, or are you also taking...
Right, what's going on there?
Yeah.
So it's the basic answer is that our mandate is to stay close to market neutral. We will take positions. They will not be very large compared to our balance sheet. So we might put on a percent of our balance sheet or so into a net delta.
Okay.
We're not getting 100. We're not buying $80 million of Bitcoins and sitting there. But we might, especially for a short period of time, think, what, I think like Ripple's gonna go up over the next hour.
Sure.
Like, we're gonna buy a little bit. And so the answer is that like we are, from sort of a, amount of capital standpoint, very close to hedged, but not exactly hedged. And what's aligned between those? Aligned between those is like well, how much would we lose from this? We don't want to put on a position bigger than we're prepared to lose. And
Okay.
so that sort of is, and we don't want to put on a position where we're kind of not sure if it's, we don't want to get close to that point. And so that's sort of how we determine how big, of a position limit we have. It's small, but it's not nothing.
Okay, cool. I had to ask that because I know some people are gonna maybe some people will string this together, maybe some people will completely miss it, but I imagine many will be like, okay, if they're market neutral, how are they exactly racking up that
Right.
kind of position? But I think that that at least gives them enough rope there. In terms of getting away from BitMEX and focusing on your own venture, FTX. When was
Yep.
this introduced? And also, was this always part of the plan for you? You were already kind of in this business. You're providing liquidity. You understand that there's a lot of infrastructural inefficiencies you can take advantage of. You probably are also dealing with all these APIs that we talked about that are broken. You see all the problems behind the scenes, and you say, not only can we fix this, but there's probably new products we can offer, and there's probably also another, I don't even know how many basis points you can make by playing in that field. What's the biggest incentive behind FTX? And then also, was this always part of the plan, or was this something that just kind of
Right.
came later?
So as you said, I think this is exactly right that like we saw a lot of the pieces coming together for a while. We spent so much time integrating with APIs that we just knew exactly what an API should have. Um, we spent enough time trading on these venues that we knew what the major pain points were, and we knew sort of inside out how they work. Um, we had the liquidity, and um, and one more thing that I'm going to bring up, which is sort of a particular pain point, is margin and futures. One weird thing about crypto, as opposed to normal finance, like the New York Stock Exchange is not worried particularly about the defaulting of its customers. That's not the job of the exchange. The exchange talks to Merrill Lynch,
Yep.
and Merrill Lynch deals with its customers, and Merrill just vouches for its customers. It's a clearing firm and just says, look, like they're good. If they default, that's on me. I got $1 trillion, so I'm good. And the exchange doesn't have to worry about that, and they can just focus on like their matching engine. Um, it's like a little bit of an oversimplification, but it's correct to first order. And in crypto, it's exactly the opposite. It's like if some individual account on your exchange goes net negative, you just lost money. You have no recourse. Like there's no way you're going to claw that back from them. Um, and because of that, all of a sudden exchanges are in the risk business. If you're an exchange and you allow margin trading, then you're allowing an account to potentially go bankrupt. And if an account goes beyond bankrupt, if they end up with negative $1 million of net value,
Then you're out.
then someone's going to have to pay that. And there's a lot of euphemisms people use for this: clawbacks, auto deleveraging, socialized losses. But whatever, they're all similar. They all mean like someone just lost money, but they didn't have anything to pay with, so everyone else lost money instead. And maybe there's an insurance fund that covers it, and if not, it's the other customers. And this is one of the central problems of like margin trading in crypto is you have to manage the risk of the accounts. And we'd seen a lot of high profile failures. I mean, hundreds of millions of dollars have been lost to this. And we'd written white papers to these exchanges on here's how we'd redesign your products. And
Oh
so
wow.
we sort of had,
Before you
in
had FTX, you wrote
yeah,
white papers.
yeah, this
Okay,
was like
proposing.
8 months before it launched, proposing like, here's exactly what we would do. Like change this 7 to a 10, change your margin system to take this collateral instead. Here's the exact parameters we would use.
I'm curious. Was it because you didn't want to be caught in a situation where you had to be auto deleveraged because there was socialized losses from someone else, or was it simply because I guess I
Right.
asked Arthur the same question of like, also your research does positively benefit the industry which you're participating in every single day. So
Yep.
like there is an incentive there, but there's also could be like a better incentive for you.
Yeah. So the first incentive was the first you said. I think we have paid about $20 million. I don't remember the exact number. I think that's about right, to bail other people out over the
Okay.
last year.
Yeah.
Places where some other account went bust and they couldn't pay up, and we had positive P&L, so some of that got
That's good
clawed
enough
back.
reason. Yeah.
And yeah, that's a good enough reason. We were getting pretty frustrated. We were like, what the fuck? Like, we just lost another $1 million of ours. Like, we don't trust your platform.
When you were right.
Like, please. Yeah. And we're like, please fix this. Like, the other thing is just like this is not that hard to fix. Like it's not trivial, but like it's not that hard to make it less bad at least. And so that was the original impetus. And then there's a second thing, which is Bitcoin crashing to 4,000 late last year, which I think was actually due in decent part to exactly this. What you'd see is basically some account gets liquidated and starts driving markets down. And now other accounts start getting close to bankruptcy, so they start getting liquidated. And you just saw this massive chain of hundreds of millions of dollars of liquidations combined with massive clawbacks. But also that just caused like an enormous amount of unanticipated sell pressure. And a substantial fraction of the reason that Bitcoin, went down 50% is that like all of a sudden just massive amounts of unintentional sellers were triggered by this string of liquidity failures. And some of these were clearly not Bitcoin liquidity failures. They were specifically Bitcoin margin contract liquidity failures where they dropped to a massive discount to spot. And so at that point we started to feel like, look, we're really long this industry, even though we're hedged, like the amount of business opportunity we have is related to this, and this is a problem we could fix. So that was sort of the second impetus for us to like start really pushing exchanges on this. We felt kind of like our advice fell on, I don't know if deaf ears is quite the right word. I think maybe ears attached to someone who was unable to affect any change in their company.
Was that the tipping point for you saying, look, we have to do this on our own or it doesn't happen? Or was it monetary as well? I know
Yeah,
those go hand in hand, but
it was both. So it was, I would say that was the tipping point. The monetary was a big incentive, but this is the thing that sort of pushed us over the edge.
okay.
We'd so in sort of late 2018 we started building this out, and sort of shortly after a lot of these massive liquidity failures, and that project started in, I don't know, November or something like that, and we sort of had a beta version up late January. It was very simplistic. I mean, it was like, did not look like an exchange. It looked like, something someone drew with like Microsoft Word shapes or something like that. But the matching engine was there.
Yeah.
And then sometime late February we had an actual GUI. Late March we had a product, and we launched live in April. And a lot of that was just piling on more and more and more features. A lot of that was UI work. And then a lot of that also was business development work. There's a lot of things that go into an exchange other than building the product. You can build the best exchange in the world, and if no one trades on it, it's just sitting there doing nothing.
Yep.
So, sort of all of those came together over that, 5 or 6 month period.
What's the best way you could describe FTX? There's, people are familiar with Binance. There's altcoin exchanges. There's
Yep.
regulated exchanges like Coinbase. I guess I would call those like fiat on-ramp exchanges. I guess you could call them.
Yep.
I don't know. There's so many different types. And then you have BitMEX, right? There's the entirely derivative exchanges. Where does FTX fit in that spectrum?
Yep. So it's a derivatives exchange. It will have some spot markets soon, within the week probably. Right now, it's just a derivatives. I think the way I describe it is like a sort of cryptocurrency derivatives platform redesigned from the ground up, and sort of combining some of the cool features of crypto platforms with some of the well-tuned features of traditional financial exchanges. And I would say that, rather than having one single revolutionary thing, it just has like 20 moderately important to very important improvements over existing products, and enough so that it does feel like a substantially redesigned product. And maybe just to give sort of some flavor of that, the entire margin system is reworked to a way almost no exchanges in crypto work. We're offering some products no one else has. We have futures on way more coins than almost anyone else has. We can take huge size and also have a lot of leverage, and also have a pretty solid blocker against ever having clawbacks or anything like that. The actual trading experience is sort of, we cleaned up a lot of the mechanically annoying things around the edges as well. And I'm happy to delve into a lot of these specific things. But I think the high, high level thing is like a completely redesigned derivatives exchange in crypto.
So people will eventually find out about the features, I'm sure, when they sign up and join. I haven't got to dive into the features yet because I haven't started trading in
Yep.
there and opened an account. But just, I check out every single exchange I see. I have to. I'm curious, and also because I sit here and do it all
Yep.
day. The first thing that catches my eye is the products that you mentioned. So what are some of those products? Because people in their head, they understand that on BitMEX there's perpetual swaps, even if they don't understand what that is. They
Yep.
understand there's futures, there's perp swaps, and then they understand on Binance
Yep.
there's spot alts they can trade. They can buy an alt and eventually they can sell it for USD or
Yep.
cash. When you go to FTX, there are products and contracts that look a lot more like they have like leveraged ETF products, and they have products you can buy which will replicate being short a
Right.
different thing, and it's a lot of things that I've never seen in crypto, and immediately it caught my eye, and then it was like, okay, that's why I had to double check. I was like, is this legit? And then I tied it all together. I was like, this is. So
Yeah.
I have to learn more. What are some of those products that are unique to FTX that no one else has ever done? I think that's probably a good intro.
Yeah. So I think one of the coolest one is the leverage tokens. And what these are is they're tokenized margin positions on a futures contract. So sort of stepping through that, what does that mean? What it means is that there's an ERC20 token. Let's talk about, for instance, BNB Bull. That's our 3x long BNB token. So it's just a standard ERC20 token that you can buy just like any other token in a spot transaction, but that moves up 3 times as much as BNB does. And then we have BNB Bear, which moves negative 3 times as much as BNB does. So if BNB goes up 1%, this goes down 3. If BNB goes down 2%, it goes up 6. And the really cool thing about these is that they let you margin trade. That's, that is what margin trading is. So you can get plus, long or short 3x,
Sure.
but you don't need to deal with collateral or margin
So there is
or
no lever.
liquidations
Yeah,
or,
exactly. You can almost
yeah,
buy spot and simulate being short, right? Which is I think what scares so many
exactly.
people when they get in. They're like, okay, I understand how to buy BNB. I understand how to sell BNB. But when you start bringing in all these weird things, and especially if it's someone who's extremely new to trading, which crypto has brought a ton of people in that have never done anything
Yep.
with finance topics or trading, and they're expected to understand, being short and understanding where liquidations are, so they can have.
Right.
Let's walk someone through this. If me, I've never used your platform, I deposit Bitcoin to FTX, and I want to be
Yep.
hedged on BNB, I could buy BNB 3x Bear, and
Yep.
if BNB goes down, do I profit and kind of walk through that, I guess?
Yeah. So yes, you buy the BNB 3x Bear. It's just an ERC20 token you own. And if BNB goes down 1%, that thing will go up 3%. BNB
Okay.
goes down 5%, it'll go up 15%. And so yeah, it's basically a way to hedge BNB position. And yeah, as you said, usually when you do a margin trade of any sort, whether it's spot or futures margin trading in crypto, there's a ton of shit you need to worry about, right? You're like, well, I bought this token, but I'm gonna go to bed now. Am I gonna be liquidated when I wake up? Like maybe, right? And then you're like, okay, well, gotta move this into this wallet, and then gotta get this collateral sitting there, and like, oh shit, I lost, gotta top up the collateral. Then you're like, oh god, I had all this extra collateral sitting there because I wanted this position, and I gotta take it out. And it's, which is fine if you're a quantitative cryptocurrency trading firm with
Doing
a
it full
lot of
time.
employees and
Yeah.
24/7 full-time automated systems and liquidation monitoring stuff. But if you just want to like, you know, get some leverage in your crypto trading, but also have a life, it's not exactly user friendly. And that's also not how normal finance works, right? It's not like you buy your stocks and you wake up in the morning, it's like, sorry, we liquidated your Apple. Um, and, and so and so that's sort of the cool thing about these. And what's going on in the background here, like how does this work, is basically the way to think of it is like there's just a bot which is managing this. And so, you buy the token, and the money that you spent to buy the ERC20 token, then the bot uses that to go put on the leverage position for you, and it will automatically rebalance, manage liquidation risk, and sort of reinvest profits for you. So that you don't have to deal with all of that, and so you don't have to worry about all of that. So that's sort of one of the pretty cool things about this. And the other really cool thing about this is because it's an ERC20 token, you can move it around the blockchain, which means that you can trade
Hmm.
it on other platforms.
Hmm.
And so one cool thing is, you have some spot exchange that you like. One thing that you could do is if they list BNB Bull, then you can get 3x BNB leverage there just by buying the BNB Bull token. And that exchange doesn't have to figure out how to manage, clawback risk or liquidations or margining accounts or anything like that. Because from their perspective, it's just a
your
spot
balance.
ERC20 token.
Yeah.
Exactly. It's just a balance. And that's what I mean by it tokenizes a margin position. Like it really does do that. Okay. And then you just move that token around.
So there's also a new dynamic of, let's say we continue to pick on BNB. We could pick XYZ, but let's just use BNB. A lot of people are familiar with Binance. It's easy if you're listening. We're not picking on BNB Bear. Let's say BNB Bull, right? I buy BNB Bull position on FTX. I can actually withdraw that to my ledger, right? I could have that on my ledger and I can't get liquidated. It's just if BNB continues to go up 5%, right? I'd be getting 15%. Yep. If it went down, obviously I'd probably get crushed, but you can essentially hold a leverage position without that risk of liquidation. Can you be liquidated on some of these? It's like a synthetic spot position, but also being leveraged. Can you be liquidated? Right. Like if I'm long, if I buy one BNB Bull, can I be liquidated on the position?
No, you will. So you'll not be liquidated. Like you're not posting collateral anywhere. You just own this token. Now, I should give kind of a legal disclaimer, which is that I can't promise BNB won't get liquidated. BNB Bull won't get liquidated. All I can say is something really weird would have to happen for that. And what's going on there basically is the fund will automatically just rebalance if it ever has losses in order to delever and avoid liquidation. Now, if BNB gaps down like 50% in a second, if like BNB's worth $30 now and 1 second later it's worth $15, this fund is probably not going to have time to manage its risk. And you won't get liquidated per se, but the token is probably going to go down.
It could essentially be worthless.
Right. Yeah. But under any normal market conditions, as long as there are at least minutes during this 50% downward move, it should have time to rebalance and prevent the sort of underlying positions from getting closed down.
One of the products going past just a simple, let's get away from BNB, I think the most interesting product that caught my eye, I scanned through every single, I couldn't even help myself. I had to click on every single one. And I'm looking at Leo. I'm a fan of what Leo is doing, but also a lot of people look at the entire alt market, right? In crypto, there's not really like an index. Right. And I think that's what so many people struggle with, but it's also a really cool thought experiment of what should be the benchmark in crypto. Should people actually be looking at dominance? Should people be looking at how the entire alt market is doing? And a lot of people will compare and say, I do it as well. I think I try to approach this market with a macro mindset of, are alts doing well? Do I want to be long alts? And you, I think, are the first exchange to introduce a product where you can actually be long the alt index. What does that alt index involve? What makes that up? Is it every token? Yep. And then the other thing when I click through the features is, let's say I buy that alt index token, I can redeem it, right? So if I sell it or whatever it is, it goes to USD or it goes to the tokens. Kind of walk through the mechanics of that one. I think that's probably the most interesting product for anyone that's listening, because most people look at the alt market and they say alts are doing well or alts are doing bad. And this is what I preach. Yep. You have to have a macro mindset. So what's that token?
Yeah, exactly. And I think, this is something we saw too, is like, we as a trading firm wanted to be able to express things like alts just got hit. But like someone would say that and someone was like, no, it was just EOS. And we're like, no, I think it was all alts. And it was like, well, ETH did, but like Ripple's up. And you get this annoying conversation. And like, what everyone wants to know is like something like, on average, how did alts just do?
Exactly.
Not always. Like sometimes you want to talk about EOS. Sometimes you really
and there's
just
an
want
outlier.
to talk about that.
Link might go on a run. There's one in 100. But overall, if alts are doing poorly, I'd rather be hedged alts than trying to point my finger at Binance and pick the one.
Right. Yeah. And so finance has solved this problem a long time ago. They have indexes. Like that's how most of these things work. There are ETFs, there are futures, and they're almost all on an index of a variety of different stocks. Everyone, investing 101 is don't just buy Apple. It's a fine company, but buy a little bit of everything because you get the same alpha, but with less risk.
Idiosyncratic.
Less idiosyncratic risk. Unless what you really want is to have the idiosyncratic exposure to one company, which is sure, buy that. And so, there's SPY and VOO and all the S&P 500 features. So, we created that for crypto. So we released Alt, which is our altcoin index. It's basically like coins. You should think of it as coins like 2 through 10, basically, in size. And so it's a weighted combination of ETH, EOS, XRP, BNB, BSV, BCH, LTC, a few other coins. And It's sort of meant to represent like the sort of like large market cap liquid altcoin market. And so, it's not telling you what shitcoins do, and it's not telling you what Bitcoin does, but it's telling you what, like,
Overall.
sort of that chunk of coins does. And we think of that as like the sort of, the liquid non-Bitcoin crypto market. The crypto market of things with real derivatives and hedging ability that like are sort of real, very valuable products that have some sort of longevity, as opposed to sort of more speculative, lower cap altcoins, which are interesting in their own right, but sort of a different thing. So that's what that index is. And yeah, we launched that index and launched a feature on it. So if you want to, get long the altcoin industry, you can buy the future. From you want to hedge it, you can sell the future. And then we have leveraged tokens on it. So you can buy alt bear, and now you're negative 3x leveraged altcoins. And I think there are a couple cool things about this. One of them is if you just want to express the opinion, like, I think Bitcoin's going to outperform altcoins, then yeah, buy Bitcoin bull and buy alt bear. And like now you've got, sort of this Bitcoin alt spread on.
You can isolate it. Yeah, you can
Exactly.
isolate your exposure. You can only be long Bitcoin as opposed to completely, well, in some ways, kind of eliminating your risk in terms of alts.
Exactly. And it sort of lets you express whatever you want to express, whatever combination you want. The other cool thing about it is, you just did some trades, you want to hedge them. You're looking from sort of some super liquid altcoin hedging instrument. Maybe the trade you did isn't a coin that's hard to hedge. But you don't just want to hedge with Ethereum because maybe Ethereum has a weird day. But the nice thing about this is you can just hedge with the alt index, and it probably does a reasonable job at representing, at least getting rid of sort of the systematic risk of the coin. So yeah, that's all. And then sort of to go to your point of mechanically what happens here is that, at any point you can kind of send these tokens back to the platform if you took them off, or just, if you have them there, you're ready to go, and you can redeem them, and it'll pay you back an amount of US dollars equal to the current sort of net asset value of that token. So, you'll basically, it destroys the token and it pays you back the current index price.
I don't want to go too deep into this one product, but I'm just fascinated with it. If, like, let's say, is it market cap weighted? Like, so we're thinking 2 through 10.
Right.
Would it be primarily?
Yeah,
primarily each. But then the flip side is, like, let's say SV. I looked at the chart this morning. I look at it like once every week just for more entertainment purposes. And, sometimes it just rose up 170% because Craig Wright published an article in China that said he was Satoshi. Right. And the next week he's back in court, and then it's all the way back down. Does that get brought into that ERC20 token, or does it get like taken out, or is it a static? Let's rebalance what that token means quarterly. How does that work? Because crypto, I think that's the biggest thing. I think that's really still the biggest thing problem for a lot of index funds in crypto. Of Ripple can go on an 800% run in 30 minutes. I have no idea. It could literally do it right now, or it could dump off another 20%. How do you value that in an index?
Yeah, it's a really good question. So. And it's something we thought a little bit about because I don't think the answer is obvious. I don't know what the right answer is. I can tell you what we did.
It's not obvious. Yeah, everyone's still testing.
Super not. So here's a judgment call we made. And I don't know if this is the right one. It seems like a reasonable one. The decision we made was basically we found ourselves torn between a really clean, simple methodology and the index we wanted. And the problem is that the obvious methodologies are either volume or market cap weighted.
Okay.
And the problem was basically those are going to be like half ETH. And we sort of felt like that made for a lame future. Like that's not really what people meant when they want to say alts are going down. That like they didn't mean like half of what I'm saying is just ETH is going down.
Because then you would pretty much just be hedge ETH. And then you're
exactly
if you're long an equal amount ETH and Ripple, you're really not even hedging your Ripple. You're actually still pretty exposed.
Exactly. And so we didn't want to do that. But you don't want to do like equal weighted because, as you say, like BSV is not as good of an indication of what's happening to altcoins as ETH is. Like, and so here's what we did: we did square root of volume weighted. Why did we do that? I don't know. The basic answer is it created an index which was about what we thought it should be, which was like somewhere between 10 and 30% of the biggest components, and like a couple percent of the smallest components in that top 10. Which we think expresses something close to what people mean when they say, "What did altcoins do today?"
Yeah.
And I don't think that's like that. Obviously, that's not God's given index for altcoins. That's an arbitrary thing. But we thought it did about what people kind of created the product people wanted. The downside is that like what what is index? Well, you look on our Zendesk and you see, well, it's got like 7.32 ETH in it. It's got, 100,322 Ripple, and you're like, all right, but so that's a trade-off. So
Does that change?
that's how does
Could
it
that,
change? So
yeah, could that change, or does it
yeah,
change quarterly, or what does that work?
yeah. So we're gonna basically quarterly we're gonna revisit it, and it's a little bit intricate rebalancing these things, um, because it's easy to rebalance an ETF because the ETF just does some trades to change what it has.
Of
A
course.
future is like a little bit more tricky because you have to make sure that the future doesn't just like jump in value. Um, and particularly interesting is trying to rebalance. So quarterly futures are easy to rebalance. You just have the next quarterly future be on a different index than the previous one. Um,
But
but
perpetual.
perpetual is an interesting question. What does it mean to rebalance a perpetual future? And if you think about it, I think there's basically an answer here. The answer is you kind of have to, I think you like tie it to the funding payment time, and you take like TWAP over that time of the two different indexes from and what you're going to, and you like multiply by the ratio of the prices in those to get the new, so you can do it. This is not like an impossible thing to do. But like it is going to be sort
It's
of
new.
an intricate hour.
Yeah. Yeah.
Um,
Okay.
so, yep.
That makes a lot of sense. I don't want to lose too many listeners. Some of them just completely got lost in that last one. So I'm going to keep them on track here. That's a very cool concept though, because so many people still talk about it, and
Thanks.
I still preach it with like you have to have a macro view. Alts do well together, whether or not they should. It's a very
Yeah.
narrative and sentiment-driven industry still. So it's nice to whether or not it's your contract or another exchange's contract, these contracts eventually have to be introduced. So
Exactly.
I like
Um,
this.
and
Yeah.
thanks. And one more thing I'll say is stay tuned on that front. I think we've got
Okay.
some more dropping pretty soon.
Okay. Cool. Cool. I will. I'm sure people will see it after they hear this. One of the things you guys are doing with FTX is Bitwise put out maybe the most interesting report of the year about exchanges with volumes.
Yeah.
And it's something that gets cited in Forbes and in Bloomberg. Well, I guess I should more say CNBC, because these people will say, all volume in crypto is fake, and it's like, well, I think anyone that spends more than a few hours a day here will understand that fat BTC is almost 100% fake. But most of what's happening on
Yep.
Binance or BitMEX, I can literally see the orders going through. Even if it is wash,
Right.
I know that that's real, right? So some of the reports, I think the headlines are misleading, but they do a very good job of breaking down what's real versus what's fake. You, FTX, did your own report. What was the most interesting finding there, and why did you do your own report in other exchanges volumes?
Yeah. So the first reason that, the big reason we did our own report was we thought that the previous ones like kind of missed the mark. And as you said, there's a lot of really interesting things in them. And I think that they found some cool patterns, but I think their headline was wrong. Like, you look at the headline of Bitwise and it's basically there's no real crypto volume outside of America. And
Reported
that's just
volume
wrong.
is fake. Yeah, but there's very real volume
Yeah,
too. I mean, that's like saying I could report
exactly.
my neighbor could report that I'm 100 feet tall. It doesn't mean that I'm 0 feet tall. I'm actually 6 feet tall. Like
Exactly.
there's something going on there. It's just like you can't believe all sources.
Yeah. And that was the interesting thing that like we just saw like source after source whiffing on was being able to express like there's a lot of fake volume and there's also a lot of real volume. And that's I think it's just like humans are really bad at expressing that because it's a bad soundbite. Like everyone wants to like everything's fake, fuck this industry, or they're like, nah, there's a ton of volume, everything's real, like go Bitcoin.
Sure,
Everyone wants to be able to take their side. And obviously I don't express it like that, but I think subconsciously it's just really easy to buy into a narrative
of
and
course.
to be like, look, like all these fucking Chinese scams are all fake, and to just get swept up in that.
Well,
And especially,
some of the transaction mining, I would almost say is engineered to look kind of real, but pretty much be fake. And then some of it,
exactly.
yeah. So it's a weird. There's a lot of nuances, and I think
It's a
what you're saying is people
exactly.
miss the boat.
Exactly. People miss the boat, and the boat being like it's complicated. Like there's a lot of fake volume and there's a lot of real volume, and everyone just sort of chooses a side of like there's everything's real, everything's fake, and CoinMarketCap just says everything's real basically. For a while, they tried to call some things fake, and they just gave up after a month because it got too hard.
Yep.
And Bitwise called basically everything fake, and we sort of looked at the report and feel like, what the fuck? Like we ourselves trade more on some exchanges each day than you claim trades total on those
Oh, okay,
exchanges.
okay, yeah.
Like that's not
So that
close.
that can't be right.
And
Yeah.
and Right, exactly. And sort of, maybe the second takeaway from this is like if you're really deep in crypto and have traded on a lot of these platforms, you sort of know the answer already, right? Like if you trade on Huobi, you've traded on OKX, you've traded on Binance, you know there's a lot of real volume there, right? Like, you try and trade Bitcoin Tether on OKX, you can do it. There's liquidity, there's size,
You can, even for individuals, I'm sure there's some people that are listening and saying, well, how would I ever know? I only trade $1,000. I know for a fact because I've had these tiny little token allocations or some random wallet I forgot
Yep,
about for a year, and you move it to some exchange and it's like, okay, that does 90% of the volume. I move it there and I can't even sell $1,000. So anyone that has actually done it themselves understands, and even if you have a very rudimentary
exactly.
understanding of what volume is, you'd still understand, okay, that what they're quoting isn't real versus I could actually sell here. Like, even if you're not a big player, you should be able to
Exactly.
see those differences.
I think that's exactly right. And I think one line from so Forbes wrote sort of an article, and one line that I thought was really great was it described one of them as like, in perhaps the laziest attempt in history to make people think you're an active place to trade digital assets. And like, yeah, like a lot of these fake volume exchanges, they're really fucking
It's
obvious.
awful.
Like you just
Yeah,
look at them, you're
it's
like, no
awful.
way. Like that market is 5% wide. It prints a trade at mid once a second, claiming trade $1 billion a day. Like, no,
With
like
volume
that's just like,
with volume bars like this, just straight across,
right.
24 hours a day, every minute of the day, equal.
Exactly. And you just like a random retail investor, you look at it like, no, like
Yeah,
that doesn't trade a billion. I can't liquidate my $5,000
yeah,
position on that
exactly,
without paying a
exactly.
few percent.
Yeah.
And then, yeah, you look at, some of the top exchanges, you look at the order books and you're like, I don't know exactly how liquid that is, but it's
But it
clearly
worked. I
real.
clicked sell and it worked. You know,
Exactly.
it's not like FX, it's not like a stock, but I could sell my amount. Like, it worked for me. So some of that's
Yeah.
real. I don't care if they're washing it. It's real volume. Someone
Right.
picked it
And so
up.
I think that exactly, and that's the thing that these reports, that they just sort of seemed like none of them were quite getting was like actually digging into like, well, this is real, this isn't, this is it.
Sure.
Because it's sort of this like annoying sorting process in the end of like, it's not a sweeping conclusion. It's like, like just do your fucking homework here. Like, and so, anyway, basically we just felt like there's a pretty big opportunity to release something which was at least like within a factor of 2 of correct. Like, and I don't think ours is perfect, but I think the others are just like off by a factor of 10. And like at least I think ours is like kind of close to like roughly the right answer. And the conclusion, again, it's sort of what you'd expect. The like big name exchanges that have been around for a while that make a lot of money, have hugely valuable tokens. They have a lot of real volume. And then the exchanges that you've never heard of before popped up 6 months ago and claimed to trade $2 billion a day. And you look at their order books and they're 5% wide. Like, no, those are fake. And
Yeah.
yeah, Fat BTC, yeah, that's fake. Huobi, that's like, and again, I don't want to say that like the big exchanges are 100% real. I don't want to claim there's no wash trading in them, or anything like that, because there is some. And even on the top exchanges, you dig into some order books and you're like, all right, I don't know, but that order book that didn't look so good to me.
Yeah.
Um, but uh, but then you look at a lot of the other ones like, no, that looks legit. And so I think the answer is on the exchanges that are sort of like really big and famous, like they're mostly real, maybe not 100%, but mostly. And the exchanges that are giant but you've never heard of them, no, that's fake. And maybe another big takeaway, which is again, it's not shocking for anyone who's traded them, but derivatives are big. I mean, more than half of volume is futures in crypto right now. And one interesting thing is actually neither CoinMarketCap nor Bitwise bothered to include futures, which is sort of missing more than half of all real volume. But they're huge. I mean, BitMEX is trading $5 billion a day, and that's all futures. Okay, Huobi are trading billions of dollars a day of futures. And that's like a really crucial piece of like the crypto ecosystem. And you look at crypto Twitter and you're like, yeah, I don't know, if like half these posts are about futures exchanges, like be a little weird to think that like there's nothing going on there. And so that's the other thing, is just like is like completely unchronicled. And one final kind of cool takeaway is it's basically all real. There's very little fake volume. I think that's like very related to the previous point, because no one was really doing public back of this anywhere. There's no incentive to fake them. Like, sure, you could report 10 times your future volume, but if CoinMarketCap isn't listing it anyway, like, why?
Yeah. Um, I guess the biggest common sense rule is, if you haven't heard of it and you're already spending some time here, it's probably fake. Like, that's just a real. I don't know. Like, someone there was already a thread today on
Yeah,
Dai, and someone was saying, well, make or die must be a scam. It broke the peg, and 98% of the volume is going on here. There's $3 billion worth in the past whatever amount of hours, and I'm like, well, that doesn't mean that Dai is fake and that all the volume is fake. It means that someone just randomly spun up a website and there's no regulation there and there's no trading.
Exactly.
Like they could, quote $10 trillion worth of volume. It doesn't mean that the $1 billion worth of volume that's happening on Binance or somewhere else is fake. What is
Yeah.
with that report? What's probably the finding that you found, or the conclusion that you reached that most people wouldn't have before you report? You
Yeah.
had a thread. There was one. I know a lot of people have called out KuCoin, and I don't. My intention here isn't to call out an
Right.
exchange or to glorify an exchange, but I know that there are some exchanges that get a lot of heat, and some that maybe
Yeah.
unjustifiably do. What's like the conclusion, even if you don't have to name a single exchange? What's the
Yeah.
conclusion that you came to that most people wouldn't understand about volumes happening in crypto?
Yeah. So I think the intuition would be pretty good, but I do think there are a few things that it would miss. And I think part of this has to do with where you're coming from. Everyone has their own biases, and you know, if you're in America, I think you're probably going to be like both in general biased against Asian volume too much. Almost all fake volume is Asian, but also most real volume is Asian, just like most things in crypto in
Yep.
Asia right now. Um, but also you probably haven't heard of a few of the top exchanges, the top real ones. And so I think like Bitflyer, ZB, those are examples of exchanges that actually have a lot of real volume. But that unless you happen to be in Japan for Bitflyer or in mainland, for ZB, there's a pretty decent chance you've never heard of them. But they
Okay.
actually have been around for a long time. They're huge businesses. Like and so I think that there are a few exchanges that are very well known, except in some specific spheres. So I think maybe that's something that at least most people would have whiffed on. I think futures volume, a lot of people would have been surprised, both at how big it is overall and at where it is. I think that most people would be surprised to know how much OKX and Huobi trade each day in futures. Most people think of them as spot exchanges, but their futures volume is way higher than their spot volume. By volume, they're mostly futures exchanges.
Okay.
Um,
Cool.
Everyone would notice that BitMEX and Deribit are futures exchanges, but people wouldn't have guessed that about OK, Huobi, Bitflyer.
Yeah.
So I think that's maybe another thing that it's would probably be surprising to some people. And in America, I think some people would be surprised to hear that America's very small. That or at least regulated American exchanges are a small fraction of crypto volume.
Sure.
Although I think in Asia, no one's surprised by that.
Yeah.
In Asia, it's obviously everyone's trading on OKX and no one uses Bitstamp. But so that's sort of maybe another piece. And then one last thing, which I'll say, which again, it's not going to be surprising if you're really deep into crypto, but if you're not, it might be, is there's very little fiat. If you look by volume, almost no trades are happening against fiat on ramps and off ramps. And as you said, that's really what they are. Their core piece is to be a way to get dollars in and out of the system. Once you have that, you don't keep going in and out. Almost all trading is either derivatives or tether.
Yeah. God, we could spend time on Tether, but I don't want the convo to go on 3 hours. I respect your time. I might hit on that at the very end. There's two more that I want to go with FTX, and then maybe I'll ask one Tether question, just because there's a lot of tinfoil hat wearers that are going to enjoy that one. For FTX, and I don't want to step on any toes here, but some people are going to listen to this and understand, look, you guys are a quant trading firm. You are a liquidity provider for a lot of markets. You're trading this much volume. You can obviously take advantage of a lot of inefficiencies. I think you've proved that in more ways than one. Now you're launching your own exchange. How is that going to work? How is FTX separated from Alameda? And then I guess for traders and clients that are familiar with how FX works or with how their stockbroker works, is it like a dealing desk? Are you guys really just the ones providing all the prices on FTX? Or are you aggregating from like a ton of different places and you're literally just, processing, I submit, I want to buy BNB Bull, and you just take the best bid and the best ask and you match it? Or are you literally the one every single time I buy, right, I can buy? Because the people that don't get where I'm going with this,
right,
sometimes if it's not explicitly stated, whether or not, I think most of the conspiracies in crypto are just outlandish, and most people just aren't managing risk and they get stopped out. And it's not someone hunting your stops. It's literally that you were just using 50x leverage. But there is something going on where if you're making the market, you are inherently trading against me, right? You don't care really if I make money, but you have to take the other side of that trade. How does that work on FTX and Alameda?
Yeah, so I'll give two answers. So sort of the core product answer is FTX as a product is an exchange, and anyone can trade on it. And you might be trading against Alameda, you might be trading against someone else. Like the matching engine doesn't care; it just matches you against the best offer there.
So it is just
And
aggregating. There can be other
so
LPs.
it is exactly, yeah. It's just a standard exchange. Now, the other side of this obviously is I think one of the key advantages that you look at a lot of exchanges starting up now, and one of the big problems they have is how do you get liquidity? If in order to get customers, you need liquidity, and they don't get liquidity, they don't get customers, and then it just never goes anywhere. And one of the huge advantages that FTX had starting up was that it didn't have that problem. Like it had one of the biggest liquidity providers in the space from before it launched, and so on the day it launched, it had among the most liquid order books in crypto. So in fact, Alameda has a lot of liquidity on FTX, but FTX would love to have as many liquidity providers as it can. Alameda's account is just like everyone else's, and it's the FTX product itself is just an agnostic, risk and matching.
Just engine. Matching, just best BBO. Okay.
Exactly.
Okay. Cool. I know there's going to be some people that are going to comment and say, well, how do I know? I got these below Arthur's thing. It was like someone kept asking about the insurance fund. They're like, oh, no, he hunted my stops. And I was like, yeah, I don't know. For some reason, I have a feeling that Arthur himself was not hunting your stops. Plans for other products with FTX. We've talked about all the products that I'm interested in, that I think a lot of people are interested in, but the one place that I try to go with CZ and Arthur for however they let me in, and I'm sure you'll open it up as well. Do you have any plans for are there going to be, do you plan to have a ton of tokens like a KuCoin or a Binance does? Are you planning to launch IEOs? That's a hot trend right now. Or what's the vibe? Or do you really just want to,
So I think the basic answer is, first of all, we want to be super responsive to feedback. And I really do mean this. I mean, we get hundreds of requests a day, and I think, we often do implement them. And so I'm super excited to know what our customers want. Like if everyone's like, boy, we really need this product, then we'll fucking make it. Yeah. And we do want to be nimble and adaptive, but I'll give you sort of what our sort of tentative roadmap, is. Cool. I think we're going to keep listing features on more things. We've been listing a feature every Tuesday. I guess we haven't really, I don't actually think we've made it public that it's every Tuesday. I think just has happened to happen that way, but internally, we have listing Tuesdays. So we'll, see another product drop tomorrow, and we continue, we plan to keep doing that, to keep offering. It's going to be,
I'll put this out tomorrow if we can get the hint here,
so it's going to be, we're actually going to still haven't finalized which of these we're releasing. It's either going to be another exchange token feature, or another index feature.
Very cool.
We have both ready, and we're sort of debating which is the right one to launch tomorrow, but it'll be at least one of those.
Cool.
So we're going to keep launching features on more and more products. We're going to try and find the products that don't have good hedging mechanisms right now, but that people actually care about, that people really do have a lot of demand to own, to short, to hedge, to get long, to just generally to trade. We just launched, because it seems to be the hot thing to do. We took up our leverage. We now have the industry-leading 101x leverage option.
Oh, that's a nice troll there. Was it intended to be a troll, or is that like a nice?
Oh yeah, absolutely. Oh, no, absolutely. We have 100x leverage, and then we have,
101.
Above that we also have 101.
Yeah.
Exactly. Yeah. I tried to kind of hint this through various Spinal Tap references, and I don't think anyone knew where that was going.
Yeah.
It's mostly just funny for me, so I don't know. But so that just rolled out. We're going to be launching spot markets before the end of the month. So that's going to be probably starting out with just a few major markets, but we may expand that to a bunch of other ones as well. We see the spot markets not so much as innovative, because to be frank, spot markets aren't that hard. You look at Coinbase, Binance, BitREX, those are fine spot markets. They work. And I think that there's a lot less room to innovate on the standard spot market.
Sure.
But we think it's going to be a nice addition to FTX, just because it means that people don't have to keep going back and forth between different places. We have so that'll be launched soon. FTT, which is our exchange token, is going to be listed at the end of the month on July 29th. That's going to be listed on FTX and likely on other platforms as well. We'll have announcements soon about that. And when that happens, we're going to be announcing a bunch of other kind of new utility for it as well.
Cool.
Once it's sort of trading. Options are on our roadmap.
Wow.
That's probably more of a few months out thing. We still haven't finalized what we want those to look like. We want to do them right, and it's not easy. And we aren't quite happy with any of our models yet, so we're going to keep tweaking, but hoping to get that launched sometime this summer.
What about IEOs? Is that something you want to avoid? I mean, regular.
I don't think that we want.
Is that a
right.
trend that even lasts? Is it worth participating in?
Right. So I think it's less that we like strongly want to avoid it, and more that I sort of think that like they're going like I think they're sort of the fad of spring 2019, and I sort of think that by winter 2019 and 2020, I sort of think maybe they're going to be dying away.
People catch on the same way as ICOs.
Exactly. I'm not saying we're not going to do them, but I think that we're not like I think that it's not what we see as sort of the big part of the future.
Okay.
More structured products probably going to be launched, including some involving options once those are live. And some pretty cool partnerships, which are going to be announced hopefully this month, and leverage tokens listing on a bunch of other spot exchanges.
Wow.
I think those are probably and that's obviously like one of the core goals of them as a product is not just that we think they're cool products, but also that because they're tokenized, anyone can list them.
They can trade it. Yeah.
And so they're on ZBG right now, but we're hoping to get them on a few more platforms as well, hopefully by the end of the month. So I think that those are all things that are on our roadmap. And I expect a bunch of other things to pop up as well.
Okay, very cool. I didn't really think about the later effects of that. If you are able to list your own ERC20 and you're creating that contract of like a 3x synthetic, you could just, another exchange has the infrastructure to very quickly list another ERC. Obviously, it has to meet their standards and everything, but that opens up a lot of doors. Yeah.
Exactly, and they don't need to figure out how to do margin. They don't need to manage liquidity or liquidation risk or anything for this. It's just an ERC20.
It's already being handled. Man, that's exciting. We could go into so many of those. Actually, before I have kind of one last that I want to ask you that I ask everyone, but I want to ask one more because I know there's going to be a good soundbite. With you mentioned that a lot of people once fiat comes into the system, right, whether it's through Coinbase, whether it's through a regulated exchange in another country, most of the trading is now done either via derivatives or via really anything else, right? Some other crypto asset or Tether. And Tether is catching a lot of heat recently in that, every single time Bitcoin rises, people say, well, it's all Tether volume. So Tether must be pumping the price. Why would, I don't even need to go into the conspiracies. I think this is probably just a more objective question. Why would a fund like yours or an exchange prefer or need or be incentivized to use Tether as opposed to trading in regular US dollars? A lot of people look at it and they're like, Tethers are moving between exchanges, or Tethers got printed, and this all must be fake.
Right.
What's the actual use case for Tether? What's going on there? Whether or not there actually is something bad going on there.
Right.
Why would someone use it?
Yep. So maybe I'll just first briefly say one kind of weird analogy here is like, let's say that like Bitcoin is going up and like, oh, it's just because so many dollars are flowing into Coinbase. That's like what's going on. Like, no duh. Like Bitcoin's going up because people are buying Bitcoins. And to do that, they're sending dollars to Coinbase to buy Bitcoins. Well, it's the same thing with Tether, right? Like if people are buying Bitcoins, some people are sending dollars to Tether, they're getting Tether and they're buying Bitcoins with the Tether. Like, you don't need a conspiracy for, Tether minting to be related to Bitcoin going up. Like,
well, they can be inherently linked, but it's not because like Tether is like this, you know what I mean? It's actually because,
Right, because that's the whole use. That's one of the points of it. And then to get to your second point of why bother with it, it sort of goes back to our experience trying to get a bank account. Like, we've spent a lot of time trying to work on banking relations. We're pretty happy right now. We have some banking partners that we've just been really happy with, but that took a lot of work, and that doesn't work for everyone. It depends on where you are, and it's like, the amount of overhead involved in doing a wire transfer is just massive. And when you're in crypto, it's so much more massive because of all of the AML KYC documentation, that banks need for this, and because of the compliance infrastructures they have are just not built for crypto. And so you're some exchange, you're like, all right, we could spend a third of our operational time trying to get a bank account to work, and it'll get shut down at some point. We're gonna have to figure out how to get our customers' money back, or we can let someone else deal with that problem. They'll create a stable coin, and then we'll just list their stable coin. And instead of a BTC USD market, it'll be a BTC USDT market, or TUSD or USDC or whatever. And it's basically the same thing. Our customers can still basically buy and sell Bitcoins for dollars, but we don't need to deal with the bank. Instead, if they want to cash out, they just take their stablecoins off of our platform to the stablecoin portal and cash out there. And basically then a few companies need to figure out how to bank in crypto, the stablecoin companies. And
Everyone
the
else
exchanges,
bypasses.
it's not like every single, exactly. And that's the key thing about stablecoins, is like only one place needs to figure out how to make that bank thing work, and everyone else can just piggyback on that. And the other cool thing is it's easy to move between exchanges. You don't have to do a one-day wire transfer to a bank, then another one-day wire transfer to another exchange. You can just move tether as ERC20 or TRC or Omni or whatever you want from one exchange to another, and half an hour later it's moved. So it just like massively simplifies the cryptocurrency infrastructure.
Sure. I mean, it's tokenizing the US dollar. I mean, it's not to say, and the reason I'm going to get hate on this on Twitter, it's not to say that something, negligent or whatever it is could be going on there. It's just to say that there is actually an incentive and a use case for a lot of people to legitimately use it, and legitimate buying pressure and demand coming for those reasons we talked about.
You don't need any conspiracy theories to explain this. That doesn't necessarily mean none are true, but
very simple mechanics there. To wrap this up, Sam, this has been a lot of fun. We could go on for hours, but this is a question that I pose to every single guest that comes on, more so because I'm kind of curious in which way they take it. What's one token, idea, project, narrative, whatever it is that you're most excited about, whether it's 2019, whether it's the next 5 years, whatever it is. It's a very open-ended question, but what's kind of the one idea or token, that interests you the most, that you think about? I don't care if you can make money on it or not, but what kind of keeps your head thinking about?
So, I mean, sort of the cheating answer is, well, a lot of things on FTX, that's why they're there. It's because I thought they're like the coolest things, and so we built them. So I think leverage tokens are really cool. I think like the way we've redesigned margins cool. Maybe I won't talk about those though, because it's kind of, I don't know, lame to shill your own product on that one. And talk about something I wish we could do, but that we can't. And that's centralized clearing. So much of the crypto infrastructure would be a lot cleaner if, and as an opt-in thing, you wouldn't have to do this, but if you wanted to, if there's some party where you could put your assets there, and they would then go to each exchange and vouch for you and say, look, this guy has this amount of assets, let him trade. And then you wouldn't have to separately collateralize every single position and exchange that you had. You could instead net those off against each other. You could store them all in one custody service, and you could not have to have offsetting positions, each requiring collateral and having liquidation risk. There's a lot of efficiency wins that you could get from this. It would make you could effectively transfer instantly, and I think this would be fucking awesome if you could do it. I think it would like add a lot to the space, and really help make the space more institutionally friendly.
Does a regulator have to play that role, or can a private institution step in and fix it?
I think a private institution theoretically could do it, if they had enough trust. I think there's sort of three things you need. Like, one is you have to have really robust risk models, because you're basically now taking on your client's risk.
Sure.
And so you need to be good at that. The second is that you need to have the trust of the platforms and exchanges. They need to trust that you are good for your word, and that you know what your client's risks are. And the third is you need a huge fucking balance sheet. And that third is one of the stickers. Curious that to make this work, you kind of have to say, look, I got so much money, like there's no way I'm going to default. Like, I'm vouching for my customers, and here's my $1 billion to back it up. So I sort of think that, like, if we had a lot of free time and also an extra $1 billion we weren't using, this is the kind of thing that we would do. But like, obviously we don't have an extra $1 billion we're not using. And it's really hard without that to run this business, because then, the exchange is like, well, what if you fuck up risk? Like, then you go bankrupt, then we go bankrupt. And like, we're not so comfortable with that. And so I think that like, and you see in traditional finance, who are the big clearing firms, they're the banks with like $1 trillion, right? It's like Merrill Lynch, JP Morgan, it's the places you'd expect. And there's just sort of don't exist in crypto. Like you don't really see that many. And to the extent they do, they're the exchanges, which aren't really the places which are going to build the cross exchange cross exchange mechanism exactly. So, I don't think we're there yet, because I don't think that there's the right party to do this, but I think it'd be a really cool product if it were done well.
Yeah. If anyone has an extra $1 billion laying around, please reach out to me or Sam.
Yeah, I'd love it.
We'll both have different uses.
We can split it, actually.
We'll both have different uses for the $1 billion, but it will be put to use. Sam, thank you so much for coming on, man. This is a lot of fun. For anyone that wants to get more info about FTX, Alameda, you guys are active on Twitter. You guys are doing a ton of stuff on Twitter, but like, what, FTX.com? Yep. How does that work? Is there anything you want to shill? I think we've covered everything, but is there anything you want to close on?
Yeah, I think that's the biggest thing. Like, our call to action is pretty simple. It's go to FTX.com, create an account, and explore it, and hopefully start trading. And we've got an active Telegram group as well, Twitter, everything like that. Super happy to hear your feedback. Would love to have you on the platform. And also, if you're like, man, I'd love to use this platform, but here's the thing that would be great for me to use it. Really excited to hear that, because maybe we can just make that thing.
Sweet. All right. So if anyone is listening to this and they check it out, be sure to tweet at me. Be sure to tweet at Sam. Be sure to tweet at Alameda or FTX, and I'm sure they'll get you taken care of. Sam, thank you so much for coming on, man. This is a fun convo.
Of course. Thanks for having me.